A recent study by the Indian authorities says 93% of the people are losing money in derivative trades. Then naturally the rest 7% are making money, isn't it? Every derivative market in the world experience the same scenario. So you should follow the 7% is the success mantra for earning through derivatives. And most of the 7% are professional traders or institutions. Now there is a probable question. What is the 7% doing? I mean, what is the success mantra or strategy the 7% is following? The answer is there is no single formula. They do lose money. But there is a unique quality that every successful trader should achieve. What is it? Before coming to that, let me introduce myself. I'm Satish Kavinjar. I've been with the financial market for the last 20 years. I worked with some of the top financial services firm in India. Let me ask a question now. Do you think of me as a good trader? Even after having such a good experience, I may not be a good trader. My friend X has enough money in hand. Is he a good trader? 100% all of you say, not at all. Another friend, why? He's having good technology infrastructures and also have money. Is he a successful trader? Maybe or may not be, but not 100%. We all are lacking that unique quality which is essential to become a successful trader. That quality is the capacity of the person to accept the risk. Again, to accept the risk. That is, accepting a loss for even a continuous 10 trades. 93% of the minds will not accept once you start the trading. Some of you may think, am I mad? Others think that I have already done this since you might have lost the last 10 trades. Here, you are not accepting the risk. Instead, you are forced to take risk by the market. This is a unique quality that need to be attained by yourself. No one else can help you for that. Once you attain this quality, other rules can be managed very easily. Other than the risk accepting mindset, you need 4 valuable tips for successful trading. And they are assume the trend, get the price action, find the trading range, and create the trading strategies. So I am presenting a simple model here that can be used by any trader in any market, any derivative market, with these 4 tips. So let me come with the first one now. What is naturally assume the trend? There are 2 type of trends. One is a general trend and there is a short-term trend when you trade. The general trend is the trend which is prevailing for a long time, maybe say 1 year or more than 1 year. Inside that, you have a short-term trend because naturally derivative can be traded within a period of a month, maybe single day or maybe a week or maybe a month or maybe 2 weeks, etc. So the short-term trend also you should find out. You can see in the chart that I am taking here, this is the Bitcoin chart where I am taking the long-term trend and there is a short-term trend inside. And from this trend, we will find out a result. Either it should be bullish or it should be bearish. Bullish in the sense it should be strong bullish and strong bearish. Otherwise, it will be mildly bullish or mildly bearish. These 4 concepts we should find out. Here is in the particular chart, I have seen it is a long-term chart is bullish. Short-term also slightly come down, but it is getting bullish. So I am in a view that it is mildly bullish at present situation. Now we go for the second bit, price action. What's price action? After getting the trend, you should know where to initiate a trade. There are 2 types of action. One is breakout, other one is reversal. Breakout is nothing but you can see in the market, you see the chart, there is always support and resistance in market. Prices will move up and move down, then they will find resistance at a higher level and support at a lower level. At that level, they will give you some pressure. But sometimes it will break that level and moves up or moves down, or it will reverse from that particular level. Here, you take the example of Bitcoin again. I am in a view of breakout, not reversal. So we got the 2 things. We assume the trend. We got the price action too. Now we want to find the third one, the trading range. Bitcoin, you see, it may be moving around 3,000 to 4,000 per an average. In a weekly, it may go around 8,000 to 10,000 point, not more than that average. Sometimes even may not move that much also. In very rare case, it may move beyond that. So we have to find that range itself. If you are going beyond that range, sometimes your target may not reach, or it will be useless data at that time. So that we should find the normal range using some technical tools. And here I am finding around 3,000, 4,000 point, and though I am taking an upper level here as 1 lakh around 7,000 rupees and lower level as 97,000 rupees or 98,000 rupees. I expect market to fluctuate between this level for the period of 1 week. So I got the three data. I got the trend as mildly bullish. I got the second one, price action as breakout. I got the level as 1,07,000 and 98,000. Now I'm going to use this for the particular thing with a trading strategy. Before going to that, every person is not in a position to find out this trend or maybe the price action. So I have a WhatsApp channel here. I am for Bitcoin. Every day I'm providing these data for weekly and daily purpose. I tell you, we trading strategy we follow only spread position. What is mean by spread? Instead of creating one position, we create two positions. Normally, how we trade, we create a buy position or sell position. We create a stop loss and we create a target. There, the risk management tool is the stop loss because if market goes against us, the risk management tool stop loss will act. But the problem with the stop loss is you might have known it or you might have seen it several times. Normally, the stop loss get triggered and it will move back fast, and that we may be losing the opportunity. Or sometimes the stop loss will jump in a tight conditions and stop never get triggered. So to avoid that, we always use in option market spread positions, even future market, for better risk management. I have built an Excel sheet for that, and I'm sharing it with you. That's Excel sheet is there, and I'll show you that one here how I'm using this data with the Excel sheet. Now you can. So now I'm just with your permission. I'm moving to the Excel sheet and just simply demonstrating you how I'm making a trade. Okay. So coming to that strategy maker. So you can see the strike here, and it is showing whether it is ITM or OTM. This is a leg one, leg two. Leg means we always do spread trade. So there is a first position, second positions, and this is a net profit and loss also. Here the yellow color which is mentioned is that where you can change the data. So it is mentioned edit or the yellow color. Other sets you cannot edit. So automatically has to come. So I already told you you need the three data. One is price action, trend, upper level, and lower level. That we already taken that for Bitcoin in the thing, and I think we are keeping it here. So this is not NSMC. I go for crypto. Crypto, the lot size is 0.001 for Bitcoin. Total lots I take, I try with one lot. The gap is the gap between one strike to other strike. You can see this for 500, 5,000. You can change that. If you want, you can change to 200, 300 or whatever it is. But time being, I'm keeping it as 500 because crypto may move 3,000, 4,000 point in a day. That's better. So ATM strike is there that you should say get from the data from the broker site. So how you trade? So price action is more important here. Price action, let's see here. We got from our analysis that price action was breakout. You remember that? Yes, that one. And price was mildly bullish. That also I think you are remembering that bullish mild. So now it is recommending bull call spread. When it is bull call spread, you had to mention buy ITM call and sell OTM call. So you had to buy an ITM call and sell an OTM call. But which ITM call you should buy? You should buy 10,000, 1 lakh. So the price should be between this 97,000 and 1 lakh 7,000. 1 lakh 6,000 active. Not much, around 1,000 rupees gap will indicate. The trading site of delta.exchange, where 1 lakh 4,000 fall and 1 lakh 6,000 fall we need. 1 lakh 4,000 and 1 lakh 6,000 fall prices. Both fall. So 1 lakh 4,000, 6,000 fall it is 750, which ITM might get around. I'll take 1 lakh 4,000. And 1 lakh 4,000 fall it 1,666. So let me try it there. 1 lakh 4,000, 1,666 and 750, I think. Yeah. So in this scenario, now you can see in the strategy maker what it is saying. It is saying if market moves up, that is you are predicting mildly bullish. If market moves up, as you mentioned, you will make 92 rupees per lot. And if it's going against you, you will get 77 rupees. You don't need to bother about stop loss anything. It is fixed. You can wait till expiry of the contract. So one lot, the margin is mentioned here. Leg one, 141, leg two, around 9 rupees, 1,000 rupees, total expensive. Because this is actually even delta exchange will allow you to trade even 1/10 of this, even for 100 rupees, they will allow you to make a trade. But never do that. That is risky because market may fluctuate around 5% to 10% a day sometimes, mostly. So then your position gets squared off if you do not have enough money. So don't avoid that one. They will error leverages, but you trade with whatever at least 10% margin should keep for all selling positions. So that's what I mentioned as 1042. You can hold also overnight, not an issue. And for 10 lot, if you are taking around 10,000 rupees, you need so that you make 10% profit. I think 921 if you are making money. So this is a unique trade. You can make multiple trades every day like this by making a good assumption. Ultimately, you start making money. It's because it's almost like an investment. Let's take another scenario too, because breakout and bullish mild I told. Instead, if you suppose if it is was bullish strong, what's the strategy? The strategy is buy futures and buy put. So when it is buy futures, it's asking you to buy future market here. So future market price, how much it is? It is around 1,05,133. So 1,05,133. And option strike is ATM strike it is carrying. ACM is 1,05,000. 1,05,000 is the ATM. So let's take what is it? This is maybe zero. No? Future market there is no premium. If the prices appear taken. And ATM 1,079. OTM for I take 79. So this is the rate now for 10 lots. So in maximum you lose around 1,030 rupees only. Whatever the case happens. Even if you wait till expiry, you may not lose more than this. But if you start making money, that is unlimited if it moves on. That is what this type of buy futures plus buy put option strategy. So whatever the condition you are telling here as a market analysis, with a price action and trend, you will get the type of strategy. And this is useful for not only crypto, for NSE and MCS product too. You can just change the lot size and total lots and gap and ATM strike, etc. So automatically the other things will be changing here. I recommend the trading with a small amount now because the reason is like below around 1 lakh rupees since the exchange is self-regulated. I think you understand the concept. If you have any queries, please put it on comment section so that I can answer and others can also see. Also, don't forget to fill out the form mentioned in the description box so that what I can share you the Excel sheet through the mail. So I think hope you are excited with the videos and you have some idea how it is functioning a trade. And I think if you follow this one, there are chances to make money more time because our assumptions may not be wrong always. Assumptions will be good. If you make assumptions in a better way, you always makes money. So thanks for watching the video. All the best for the trading.